It was a consolidation week for ES, but is this the start of a larger correction, or can we still make a push into new all-time highs? This is how I'll be trading ES this week. Last week we were able to make a new all-time high, but buyers were unable to see that acceptance above 7,018 that we talked about last week, and then we ended up putting in a look above and fail of the prior week high, and this started a correction back into 69.70 and 69.37, and really the rest of the week was spent basing in this range with another rotation back into 7,018, which was rejected on Thursday. There was also quite a bit of overnight movement last week, which made trading in RTH a little bit more difficult, especially since we tended to have trend days either up or down and less two-way trading intraday. You can kind of see how we started the week with an overnight sell-off on Sunday night, trend down all night on Sunday. Then we put in a failed breakdown of the Friday low overnight, which then gives us some overnight relief rally, and then trend day up into the Monday regular trading session, and then a little bit choppy. Then we put in a look above and fail of the prior week high on Tuesday. So then we get trend day down on Tuesday, continuation and trend day down on Wednesday before finally getting that relief rally that starts Wednesday. This follows through overnight into Thursday. So a lot of the moves were starting overnight and then getting continuation into the regular trading hour session. So that made it a little bit harder, less two-way setups in general. And then you can see that this relief rally started on Wednesday, goes all the way up into Thursday, and then rejects 7,018 again, and then a little bit choppy correction there Thursday and Friday after that. Overall, the best longs last week were on the failed breakdown of the Friday low at 69.56. Then again, the failed breakdown of 69.38 on Wednesday, which gave you an entry for that relief rally that continued overnight into Thursday. And then finally, the failed breakdown of 69.75 on Friday. On the short side, the best short of the week was that look above and fail of the prior week high, where we failed to see acceptance above 7,018 and then failed back below, rejected the prior week high from below, and then saw that corrective action with that trend down on Tuesday all the way into Wednesday. All of this action last week really just settled us into balance in a range between 7,018 and 69.26, which is also the prior week low. And we had rotations up and down inside of this range. So the key pivots for next week would be the top of the range at 7,018, the mid pivot of the range at 69.70, and then the bottom of the range and the prior week low, which is around 69.26. The plan for next week would be to look for rotations inside this range. The typical rotations inside a range would be fading the edges of the range, looking for failed spikes underneath the range that then traverse back up. And the main thing to be watching for next week will be if we do break the range to one side, is there continuation, or is it failed continuation that comes back into the range, which typically would traverse back to the other side. Early in the week next week, if the mid pivot at 69.70 fails, we can see rotations towards the bottom of the range at 69.26. Then if the bottom of the range holds or traps, we can see rotation back up towards the mid pivot and potentially the full traversal back to the top of the range. So buyers would need to break out that 7,007 to 7,018 range for another trend move and range breakout to the upside into new all-time highs, while sellers would need acceptance below the prior week low for another pullback leg to target 68.64, and then everything in between is just a range between 69.26 and 7,018. So as far as the top setups for next week, the weekly trade setups to watch for, I would definitely watch for a failed breakdown of the prior week low at 69.23, which would be a look below and fail of the range low, targeting a reversal back towards the mid pivot at 69.70 and possibly that full range traversal into the top of the range at 7,018. Failed breakdown of the Friday low low at 69.61 is another long option for potential rotation from this mid pivot area back into 69.91 and 7,007. Then if the range does break to the downside and we do get a larger sell-off, I would watch for a failed breakdown of this low from the beginning of January at 68.66. Watch for a failed breakdown there, which would target a relief rally back into potentially the back test of the bottom of the range from below at 69.26. For the short side, shorting into 7,018 is a little bit harder now because it's so weak and it's rejected so many times. So it's best to watch for another look above and fail of 7,018 and the Thursday high here before being short, which could potentially get you short for rotation back into 69.91 and the mid pivot at 69.70. You could also look short early in the week if 69.70 fails and is rejected from below. That might get you short for rotation to the bottom of the range at 69.37 and the prior week low 69.26 area. Lastly, if we do see the failure of the prior week low, especially if the prior week low fails and is rejected from below, then you could look short for that correction and sell off, which potentially target 68.64. Those are the key pivots and weekly trade setups to watch on ES this week. If you want to trade live with real pros every day, join us at Trade with Insight.